Hi guys, happy Sunday. Good evening, everyone. I hope you're all doing well. I hope you're enjoying the weekend. Even as we get ready to start the week tomorrow on Monday. This is the 1st of March 2026 on Sunday. So I hope you all have had a great weekend. I've also had quite a chilled one. And even in my chilled weekend, there's still there's still quite a lot happening geopolitically that will heavily affect markets as we get to start off the new trading week from tomorrow. So let's see what are some of these things that have been happening globally that will affect the financial markets. So we have the war between Israel, we have the US and Israel against Iran. So over the weekend we have seen the war escalate between Israel and Iran, where the US and Israel fired missiles towards Iran, and during that war, the Iranian Supreme Leader Ali Khamenei got killed during that war, and he had been the Iran Supreme Leader for for more than 30 years. Okay, so he was killed during that war that started this weekend, and it has been quite a very dangerous war that has really escalated, where missiles are flying over each other's airspaces, and that definitely will get to affect the financial markets. Now, one of the countries heavily involved is the US. So definitely the US dollar will be heavily affected from tomorrow. So I'm looking at a potential very serious gaps in the financial markets and markets as markets open. We'll be looking at commodities like gold, commodities like oil, and that is both for crude oil, Brent oil. We'll also have a look at silver and also get to see as the US dollar is heavily involved as well in this war. How will it affect all the major pairs this week? So expect quite a bit of volatility this week across the financial markets due to this war. But let's also see how will this war get to affect the various how will this war get to affect the various instruments? All right. So starting off with gold. I know majority of people this week will be looking at gold and wanting to buy gold, but it's important to understand why will you be buying gold? We are not just buying gold for fun. We are buying gold because of certain reasons. Okay. So first things first, it's important to understand gold as a financial instrument and as a financial asset. So gold is one of the most sensitive financial instruments to macroeconomic news. So, and it serves three major roles. One is that gold is a store of value. The second thing is that gold is a safe haven asset, and gold serves as an inflation hedge, right? Is used as a hedge against inflation. So, unlike currencies, gold does not produce yield. Its value is driven primarily by economic uncertainty, interest rate expectations, inflation expectations, currency strength, and institutional capital flows. All right. So, with that understanding, and in previous situations when you've seen countries having, let's say you have global wars, because previously sometime this war has not just started this weekend. It started previously when you had the Israel and Iran war again. Had It had started a while back. Then the US now this time round has launched missiles. The US and Israel have launched missiles to Iranian airspace. Then Iranian airspace as well are declaring that they are going to revenge. So this is a very delicate and sensitive war because the countries involved, the countries involved this war can end up escalating very highly because of the countries involved. So, and considering the fact that now it has led to the Iranian Supreme Leader, Ali Khamenei, being killed, then now this is a conflict that is going to escalate very fast. We have seen a video clip where the Iranian the Iranian flag of revenge has been lifted across one of the largest mosques. I think it's the third largest mosque in the world. So they have lifted a flag of revenge. So definitely we expect retaliation from Iran. And if we see retaliation from Iran, then that will now get into a full-fledged war between Israel and Iran. And definitely we have US supporting that. We have the US supporting Israel. So these will have quite a bit of, these will have a very huge impact in the financial markets this week. So with that understanding, let's see. Here we're starting off with gold. So like I've mentioned, remember gold is a store. Gold has three major roles. It is a store of value, it is a hedge against inflation, and it is a safe haven asset. Now, during times of wars or economic uncertainties or pandemics, usually gold investors run to gold because it is a it is a safe haven it is a safe haven asset, all right? So recently, when you had even the war between Russia and Ukraine, you have the war between Israel and Iran. It fuels the demand for gold because investors get to dispose of their cash assets and in get to buy gold. So that definitely drives the demand for gold and increases the prices of gold higher. So currently, we saw the last week close for gold was at 5278.5. So we are looking at chances are very high we will see price rallying all the way to these areas of 5,600 and even potentially breaking above and rallying to 6,000 because this war is going to really escalate. And currently it's being termed as World War III because it has the ability to become World War III. This is a war that has already now claimed the life of the Iranian supreme leader. So definitely this is going to end up being a full-fledged war, right? So the value of gold is going to shoot up by, the value of gold is going to shoot up by a very big, it's going to shoot up by quite a lot. Chances are very high. This is when we will see prices of gold even crossing the 6,000 mark. It is a very high possibility. All right, so gold is a very important asset to watch out for this week. Now, technically, we've been talking about this level here at 5077.155 and 5005, which is this area. So we had this was the mid range. This was the mid range here. Then we had the breakout above, a high formed. Now the retest, then a continuation of the rally higher. All right. So the next area of interest is these highs of 5,600. Then due to the geopolitical happenings that are going on, once you see price break above these, the next area of interest we will see is price going to the areas of 5,800 and even 6,000, 6,000 lakhs. All right. So expect the prices of gold to push higher. Then we have US oil and UK oil. We have crude oil and Brent oil. So for oil, let's first understand the dynamics of oil before we even come to the technical side of things. Let's get to understand how does this war, all right, how will this war affect the prices? How will this war affect the prices of oil in the financial market? Okay. So this is what you have. Just a second. So this is what you have when it comes to oil, right? So it's not only supply disruptions that will drive up the price of oil. The fear of a disruption has an impact as well, because since tensions started escalating between the US and Iran, crude oil prices have accelerated. The crude oil prices have accelerated. Okay, so insurers are raising prices for tankers transiting the Strait of Hormuz, which raises the prices of oil, and that rise ultimately trickles through to consumers, right? Because the Strait of Hormuz is a very important pipeline for the transport of oil. All right. So with Iran and Israel I mean, with Iran being at war, right? With Iran being at war, then definitely it will affect the usage of the usage of that pathway, right? So what we have is that if we look at the prices of oil for both the crude oil and Brent oil, and if we look at the prices of oil between crude oil and Brent oil over a period of time, starting off with crude oil here. So technically speaking, we saw price break above these level here, the areas of 66.47 and 65.66, and this is the range we have been working with for quite a while, from this supply all the way down to this demand and back to this supply. That range is filled, then back to this demand, then back to supply. That range was filled. Now we saw a slight push to the areas of 64, then a strong push higher, a break above these are retest. So this definitely is a potential continuation of the rally higher. And these on the 4 hour. If we come to the daily time frame, this is what you have. So on the daily time frame as well, we are looking at prices coming all the way to these highs of 70. You're looking at crude oil getting to the prices of $70 per barrel, or even pushing higher. And if we see more momentum coming in, the next area of interest we will see price coming to is these supply area here, these levels of $74 per barrel, right? So chances are very high now that you've seen a break above. So this is the first area of interest, the 70 area. Then the next area of interest is the levels of 75 based off this supply. Because again, if you see, this supply was the major origin of these whole drop all the way down to this demand. So the major range is from this supply to this demand, then from this demand back to that supply for the major range to be filled. Right, and these are major range based off the daily time frame. So it's a very crucial range. So, and with the geopolitical tensions going on, definitely it will cause these will cause global supply shocks for oil. So, and if that happens, then definitely expect to see the prices of oil going up. So I'm looking at a potential rally to 70. And this is for crude oil, a potential rally to these highs of 70. And if we break above these, we are looking at the full range being filled all the way to these areas of 74 based on this supply, 74, even 75 areas. All right. So this is very crucial for all oil traders. Then you have UK oil. This is Brent oil. So you can see from on the technical side of things, on the daily structures, this is what you have. So price is almost filling this range from this supply at 76. 76.97, that's about 77, and 74.91, that's about like 75 areas. The market closed at 73.20. The major range is from this supply all the way down to this demand. Then again, you had from this has been a very key from this supply all the way down to this demand. From this demand all the way to this supply. From this supply to this demand. Now from this demand all the way had a breakout above, a retest. When in the previous videos we mentioned about this for both US oil and now this UK oil. Then a continuation of the rally higher. The next area of interest is price coming back to this supply area here. Then once we see price fill this range, depending on the kind of momentum we will see for this, we might even see price get to break and the prices of Brent oil going all the way to 80, back to these highs of 80, back to these highs of 81. All right, because again, these highs of 81 now marks this area of supply up here, back to these very key highs up here. All right, so we have the range to fill till here. The moment you have price fill that range till this area here, then the next area of interest is this supply area. So those are the two key areas of interest to observe and see how price gets to react to that. Okay. So we have that. Then let's have a look at let's have a look at let's have a look at silver, XGUSD. There it is, very strongly pushing to the upside. This is what we have, very strongly pushing to the upside. So the major range that we've been working with on silver is from this demand, at 72, all the way to these all-time highs at 120, and back to this demand, that range was filled. We had a push up, then a push back to this demand, that range filled. A push up, back to this demand, then you have now a push up. This was the first obstacle, retracement, then another strong push to the upside. So we are looking at potential continuation of the rally higher, and prices coming all the way to these levels of 103.676, 67674. This is now the next area of interest. And the moment price breaks above, we see price rallying all the way back to 120, right? Rallying all the way back to 120. So we have that. Let's observe and see how price gets to react to this. Okay. So those are the major instruments that will be affected. Then you have the dollar index. So this is DXY. Now let's get to understand what will be happening to the dollar index. So technically, I will expect that technically I will expect to see price come back to this demand before now a potential push to the upside. But now this war has two scenarios to it. The first one, it can either weaken the dollar, right? The first one, it can either weaken the dollar, because again the US is heavily involved in this war. Or the second thing, it can strengthen the dollar because sometimes war is good for markets, right? Sometimes war is favors. Sometimes these geopolitical tensions, they favor financial markets. So that means more money will need to be pumped into the into the US economy. All right. So we might see a potential strengthening of the dollar. And if that happens, then definitely we will see the reaction on the major pairs, either GBP USD, Euro USD, NZD USD, AUD USD being bearish, and pairs like USD CAD, USD CHF, USD JPY being bullish. Okay. So we might get to see that happening. Those pairs being bullish. However, let's just wait for the markets to open so that we can be able to now determine the direction that prices will get to. But those are my sentiments that I'm. Those are the sentiments that I'm waiting to observe and see this week in the financial markets. Right? Those are the sentiments. Those are the things that I'm waiting to see and observe in the financial markets based off this war, right? And considering now that we can see even the UAE Capital Markets Authority has mentioned that the Abu Dhabi Securities Exchange, that is the ADX, and the Dubai financial markets will be closed on Monday and Tuesday following the attacks in Iran, right? So the Kuwait Stock Exchange had already implemented a trading suspension until further notice. So Iranian missiles have hit Kuwait as well as Amman, Doha, and Riyadh. Okay. So this is something that really has a really big impact across the financial markets. Now, this war has even spread even into countries like Dubai. However, uh, it's important to note that However, it's important to note that this war this time round, is the most serious it has ever been in the history of wars between Israel and Iran and the US. This is the worst that it has gotten to. Okay, this is the worst that it has gotten to. It is disastrous, and considering it is just a few days into this war and it has already claimed the lives of the Iranian supreme leader, and they have already shown that they are willing to retaliate. So definitely, this is going to lead to a very huge. It's going to lead to a very huge war. All right, a very it's going to lead to a very huge war. Okay. So with that, I'll share more updates on what to expect, especially from tomorrow once the markets are open, right? But so far, we've only seen what President Donald Trump has said about the situation in Iran, and he mentions that I remember he mentioned that Iran should not retaliate, but from the actions from Iran, and even them raising that flag of revenge, definitely expect that they will end up retaliating. All right. So Iran has since launched a counterattack on the US and its regional allies, which is the US Central Command. All right. Uh, Iran has since launched a counter-attack on the US and its regional allies. So the war is intensifying, all right? But let's get to see how it unfolds and how the markets get to open and react. So I will share the usual outlook on the various pairs, which is tomorrow. But for this is specifically for discussing this war and its effect on gold, silver, and the prices of oil. All right. Remember, oil is a commodity that is used globally. So once the prices of oil go up, it will get to affect every single person globally. All right. So we can't just assume and say that that is not a war that is we can't just assume and say that is not our that is not our that won't affect us. It will affect us in one way or another. All right. So with that, guys, I'd like to wish you all a very amazing start of your week, and looking forward to seeing you. Looking forward to seeing you have a very productive and fruitful week ahead. So cheers, guys. See you on the outlook.